makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, markets have been gripped by fears of an all-out trade war. That uncertainty around President Trump's tariffs have rattled stocks over recent weeks. But risk sentiment is now turning positive. That's as reports suggest that the next wave of tariffs may be more targeted than first expected. Well, we'll discuss all of that, what that means for markets, with Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. We're also joined by Ross Matheson, our EMEA News Director, to discuss the latest news out of Washington, as well as the talks aimed at achieving a ceasefire in Russia's war on Ukraine. So thank you both for joining us. A lot to talk about markets, but maybe, Ross, let's just start on politics. President Trump's, April 2nd tariffs are reshaping what we thought would be broader. It looks like they're more targeted. Is it geopolitical, or is there an economic reason at play?
Well, it's probably a bit of everything, but it's also just the way that Donald Trump operates as a businessman turned president, is that he always wants to keep things in the back pocket for later. So what we're hearing from our own reporting is that with these reciprocal tariffs on April 2, they might be, as you say, more targeted than thought. Not all countries necessarily hit. And also those sectoral tariffs he's been talking about, autos, chips, pharma and so on, those seem to be going to a later date in the back cupboard again. So the idea is that maybe Donald Trump wants to do something where these reciprocal tariffs take effect immediately, according to our reporting again, but in a more targeted way. He'll see how that goes, and then he's got more firepower, if necessary, to push further. So there's probably all kinds of imperatives going on there. We've seen he is willing to change his mind, sometimes very quickly. So this could be perhaps the opening gambit on April 2. He'll see how that resonates, and then maybe he's got more to come. So it's probably an economic imperative, maybe one clever eye on the market, even though they say they're not really watching the market, they probably are, and how the market is interpreting all of this, and then obviously strategic.
Yeah, I mean, Grace, this is $1 million question. Is it, does he look at the markets? Does he want, if you look at the longer term strategy of President Trump, and if it's reshoring, he feels like the U.S. has been getting a bad deal, full stop, then it's not necessarily equities that he's looking, but it's longer term growth.
I think he's playing the longer term game, and he's willing to take a little bit of short term pain in order to achieve those larger objectives. And I think for the markets, beyond the sort of tariff tennis that many investors feel they're playing at the moment, it has changed the profile of the rhetoric, which changes the profile of sentiment and market returns. So with a view on the longer term game plan and gains, I do think that, US growth is going to still continue at around a 2% clip. What's interesting now is that you could have European growth also elevated, reflated, so to speak. And when we try and translate that into markets, I'd say just a couple of things at the outset. Firstly, a 10% drawdown in the S&P. I think that's quite healthy. That cleans out, to some extent, some of the exuberance that we had. And actually, when you look at previous 10% drawdowns, correction territory on a go-forward return, you've got a very high probability that the market responds well, particularly if you avoid a recession. And then I'll just say, Francine, portfolio resilience is really our key theme still for this year, and there's many other portfolio actions that we can perhaps talk to.
I was going to ask, Grace, I mean, if you look at the world now, how do you build a portfolio given a lot of uncertainties? We think we know what the president wants for the U.S. There's also a concern that actually he gets lower growth and higher inflation because of tariffs if they're not calibrated.
Yes, absolutely. I mean, part of that changing of the profile is changing of the balance of tail risks. And so if we think about our outlook for the next 12 months, 55% is this trend-like growth. The other 45 is therefore tail risks, which would be roughly evenly spread between recessionary risks and inflation risks. So how to build a portfolio in that backdrop? I mean, we still think the starting point of a 60-40 equity bond portfolio is a good place, and I think fixed income has really proven its worth over the last couple of weeks, where you've seen, as growth fears come in, that asset protect. But I think it's not enough. You really need alternatives. So gold is a key call of ours, infrastructure, hedge funds, and all of these assets add an uncorrelated nature of the return stream, and then obviously you've got private equity and debt as well. But it's those real assets, the uncorrelated assets, that I think are really apt for 2025.
And Ross, I guess the concern is that he's trying to do a lot, right? It's, trying to negotiate some kind of agreement with Ukraine. We also have officials from Ukraine and Russia meeting in Riyadh. And then there's all the stuff at home domestically, carving out education, but also looking to do more when it comes to, for example, the economy. What do we know about Russia so far? Is that a distraction, or is it one of President Trump's focal points?
Well, clearly it's a focal point. I mean, he promised repeatedly on the campaign trail and then early in office he was going to get a rapid ceasefire in Russia's war against Ukraine. He's pushing overtly and publicly multiple times a day on that front. I mean, the talks that are happening in Saudi Arabia today, it was US-Ukraine initially, now it's US-Russia. They seem to be very technical in nature, very granular. It's about perhaps moving from getting away from targeting energy, but also to some kind of understanding about maritime traffic again in the Black Sea. So it's bit by bit, and they haven't really tackled the hard stuff. The really hard stuff is what to do exactly where the fighting is on the ground inside Ukraine. And it doesn't seem the conversation has really gone there in any great detail so far. So it's a little bit by bit. Obviously, Donald Trump will probably claim the win for every little development they get. But meantime, Ukraine and Russia are still attacking each other. We're seeing that going on. Russia is still firing missiles and drones into Ukraine and so on. The fighting is still going on. So whatever they're talking about so far has not really impacted what we're seeing on the ground.
And Roz, has there been any concessions from Russia at all?
Not notably so far. I mean, we know from our own reporting that Vladimir Putin has got some very maximalist demands here, and he's going into any conversation with the US sticking to those demands. Those are things that he says are not negotiable, and very clear that he's willing, if necessary, to drag these talks out for as long as needed to get to his maximum position, because these are views that he held before Donald Trump took office. These are things he wanted before Donald Trump took office. He probably knows how to navigate Donald Trump a little bit on it, and maybe they get to the point there's a proper ceasefire. But Vladimir Putin still has things that he just wants out of this. That's very clear. And a lot of that includes territory and also, clear understandings about what Europe can do or the US can do after in terms of peacekeepers and so on. That hasn't changed.
Grace, what does this all mean for Europe? Again, we're seeing this huge defense spending, and which we see stocks even being a 200% higher in the last 2 to 3 weeks. Is this a space that you can get involved in?
I think you can. So one of our key themes that we initiated actually last year is security, and defence is a key part of that, as is cybersecurity and also supply chain security and energy security as well. But look, I think the fiscal package coming out of Germany, which includes sort of that defence element, that is meaningful. It could be meaningful for growth, it's meaningful for sentiment, meaningful for corporate earnings later down the line, and it is part of this shifting world order that I think should be reflected in portfolios. So you can do that via global equities leading into themes like security. Industrials would be a sector that benefits, or indeed such as assets like gold, because I think even in for humanitarian purposes, obviously we all desperately hope for a ceasefire. Even if that happens, geopolitical risk I think is not going away. I think it is part of what we should expect in the world that we live in over the medium term, and therefore to have those hedges in the portfolio for more volatility, for geopolitical risk, I think is entirely sensible. So gold would be a good one that we still see upside related
infrastructure?
to that. Infrastructure as well, particularly, I mean, we divide infrastructure into two. Core infrastructure, I think, has got tremendous benefits because it's not correlated or very lowly correlated to both equities and fixed income. So as we think about those tail risks that we really need protection for, great. Income, it compounds income very nicely, and so core infrastructure to us is a key holding for the world that we see. And then you've also got new infrastructure that feeds into a lot of the AI build out, as an example, that I think is also quite pertinent, but arguably a little bit more bid up, sort of in recent years. But certainly I think core holdings in the portfolio for this backdrop.
And Roz, I guess the concern is that when you're an investor, you see a lot of hope for Europe given, the low bases, but actually Donald Trump could really test a lot of these heads of state individually, and there's no clear channel by which, they have a common policy.
Well, that's right, because all the understood norms are going. So the relationships that you have, which are based, it's a kind of a twee thing to say, but they were based on trust, and that seems to be going. And so, how do you now talk to each other in a way that you feel is an agreement that's going to stick? And who speaks for Europe in this minute? Who has Donald Trump's ear? It could potentially change. Is it the incoming Chancellor for Germany? Friedrich Merz has been very busy, very quickly, as we've been hearing on the defence side and the debt break. Is it Emmanuel Macron? Is it Keir Starmer? But how do they speak in a united fashion for Europe? Because we're seeing, again, the European Leaders Summit last week quite divided on even how to get more aid to Ukraine, a fairly basic question, and that got stuck despite many conversations and more calls that leaders are planning this week. So if Europe's trying to present themselves as having a moment, they're kind of challenged in terms of just some of the basic stuff still.
Roz, thanks so much. Rosalind Matheson there, our EMEA News Director. Grace Peters from JP Morgan Private Bank stays with us. Let's also go to Turkey, where capital markets regulator has banned stock short selling and relaxed buyback rules to prevent further market turmoil. Now, the move comes in the wake of the arrest of President Erdogan's main political rival, which sent the lira to an all-time low. Now, for more, let's bring in Bloomberg's Onur Ant from Istanbul. Onur, thank you so much for joining us. So what do we expect to see in markets today?
Francine, as you said, regulators, including the capital markets regulator and the central bank, have moved swiftly over the weekend to prepare for expected market volatility on Monday. And judging by what's happening to stocks, CDS, even Turkish bonds, it seems to be working. The drop in the lira is definitely much less than what we've seen so far since the detention of Ekrem İmamoğlu triggered this latest political turmoil. And elsewhere in Turkish markets, we are seeing signs of stabilization. Now, to be sure, the stable levels are not the same as the levels we have seen just a week ago, but it looks like Turkish markets have or are about to find a new equilibrium where there will be more stability thanks to all these steps and measures by the central bank and other regulators we just mentioned as well.
Yeah, and Onur, we're looking at pictures, of course, of a lot of anti-government demonstrators clashing also with police through Sunday following the jailing of İmamoğlu. What's the significance of this arrest?
Well, the arrest is very significant because this is the first time Turkey is jailing a politician, not just maybe representative of a somewhat marginal or smaller party, but a politician who's really nationally popular. Someone who has the ability, who has the potential to defeat Erdogan in the ballot box. That's why Ekrem İmamoğlu's detention first and later formal arrest by Turkish courts, is so much more different than anything else that we have seen in Turkey. And it kind of marks a shift from what everyone used to think of as a possibly flawed democracy, an autocracy of some sort, to something different, where President Erdogan, if he chooses to run for office again, will probably be able to run against someone of his choosing, so to speak, someone that he could find more favorable to run against. That's why Ekrem İmamoğlu's detention and arrest is very significant.
Yeah, thank you so much, Onur, our managing editor for the Middle East and North Africa, Onur Ant. I have to say we have some really great people on the ground bringing you the very best coverage. There was a story saying that, look, President Erdogan was betting that the world turned pretty much a blind eye to this turmoil in Turkey, but so far we've seen a surge in Turkey's borrowing costs, a slump in stocks, a decline in the lira, and investors, of course, being the only force providing a check on Erdogan's aspirations. Now, coming up, China says it's prepared for tariff shocks as the U.S. calls for more action on fentanyl as a precondition for trade talks. We'll have the details next, and this is Bloomberg. Well, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the U.S. has said China must stop the flow of ingredients used to make fentanyl before any trade negotiations can begin. Now, the exclusive comments were made by Republican Senator Steve Daines, who met Chinese leaders, including Premier Li Qiang, in Beijing over the weekend. Now, in just a moment, we'll look ahead to earnings from the Chinese car maker BYD with Bloomberg's Craig Trudell, and we're also still joined by Grace Peters from JP Morgan Private Bank. Let's begin with Bloomberg's China economy and government editor, Alan Wong, to have a look at exactly what's going on. Alan, so on the tariffs, talk to me a little bit about what this Republican senator said. How can they stop ingredients used for fentanyl from going to the U.S.?
Yeah, so the U.S. has pegged the issue of fentanyl to the trade tariffs. And the most recent development is that Montana Senator Steve Daines came to China and met with several Chinese leaders, and he said that he communicated the request from the U.S. that China must stop the flow of fentanyl precursors into the U.S. before they could talk about tariffs and other non-tariff trade barriers. So Steve Daines said that in meetings with Premier Li Qiang, China's number 2 leader, which is injects some uncertainty into the prospect of a leadership summit in the near future. As you may remember, Trump recently said that he expected to have President Xi Jinping of China come into Washington in the not-so-distant future. But given that China has said that it has done all it can for the U.S. in terms of fentanyl, it remains in doubt what China can further do to curb the flow of these ingredients in the U.S. to fulfill that condition for talks.
Alan, I have to say I'm a little bit confused about how aggressive the Trump administration wants to be with China. So we've heard also the premier saying the country is prepared for shocks that exceed expectations. Again, as the whole world, frankly, braces for these extra tariffs, possibly targeted, possibly not, from President Trump. But does he want to hit China hard, or does the president want to have a relationship with President Xi?
I must say both tracks are happening at the same time. I think Trump would loathe to show weakness in the negotiation, and there are several major events coming up that'll give the U.S. an opportunity to make any moves it wants directed at China. On April 1st, we know that a report on China's compliance with a Phase 1 trade deal struck during Trump's first term will come into being, and then on the next day, Trump has promised reciprocal tariffs globally. And although the extent of those tariffs and the scope of them remain to be seen, if Trump moves hard on China using those reasons, then we can expect to see China responding in kind. And at the same time, China also needs to figure out exactly how it will respond to the U.S. request for it to more aggressively crack down on the flow of fentanyl precursors into the U.S. Given that China had said that it's done all it can, what China does next will determine how the U.S. will, what kind of attitude the Trump administration will show to the China in realizing some sort of a high-level talks between the two countries.
No. Okay, so I want to talk about BYD, which is launching this EV to rival Tesla's top seller at half the price in just a second. But Grace, I guess, always the $1 million trillion question is what kind of relationship does China have with the rest of the world? Will China change enough to keep Trump on side, but also maybe be a force for good for Europe?
Yeah, I mean, the European angle is the one that really interests me, because I think from an investment perspective, people still feel quite cautious, a little bit bruised perhaps from investing in the region. But I think if you invest in China through Europe, actually you've got really nice optionality around, should consumer sentiment improve via luxury goods stocks, you can benefit in Europe. Should the housing market or construction, sort of be reinvigorated, you've got good exposure via the materials, sort of mining companies. And so to me, that is a way to invest in a region that, yes, it's had a rally, but it's still reasonably under-owned. There's upside from domestic now, as well as these international drivers. And that is the preferred way from a risk-reward perspective, in our opinion, to get exposure to the Chinese market and some of these drivers.
I mean, changing the Chinese economy is not easy, but do they start consuming significantly more as soon as growth, picks back up?
So much of it, I think, is still around the housing market, because so much of household wealth is tied up in the housing market. And so I think that really is the structural thing we need to see change in order for consumers to feel better, to spend more. First and foremost, that's what we'd look to. But I do think that the GDP is on a declining trajectory structurally. If we think over the next 10 years, China GDP will likely fall, and thus this note of caution really around reading too much into short-term dynamics as well.
And I'm quite excited actually about learning more about BYD, because this is one of the most important electric vehicle makers in China, and they come up with some pretty good propositions, Craig.
Yeah, I mean, today we'll get earnings from them where we are expecting for BYD to actually report more revenue for this past year than Tesla did. And so, this is a company that has really been on a roll. I think last week their announcement of 400 kilometers worth of range in 5 minutes really turned a lot of heads. If they can
that's
really,
a lot.
that's
Even
a lot.
I know that. Is it
lot and
better
very
than
quickly.
Tesla?
better than Tesla, better than anybody. I mean, this would essentially have the potential to eliminate range anxiety. I don't know that you would necessarily want to do this with your car all of the time, but if you can, in a matter of 5 minutes, get enough range to, fill quite a lot of EVs actually, to essentially a full charge. This is potentially game changing, and so not only have they been delivering, I think they are giving investors reason to think that they can continue this momentum based on some of the innovations in the product that they're delivering for the market.
And I think they had 2 new cars, right, which they announced a short while ago, even just yesterday. Are they primarily sold in China, but in a view to really export significantly to Europe, or will they also be sold in the U.S.?
I think it remains to be the case that BYD is primarily doing most of their business at home. Are they growing internationally? Absolutely. Are they, on the other hand, maybe struggling a little bit with some growing pains, needing to do a lot of brand building and awareness building? And are they running into some real resistance? I think in the U.S. we're not going to see BYD until and unless trade policies change. I think the likelihood of that seems a bit low. But here in Europe, even with the tariffs, giving them some trouble, they are managing to grow and outgrow some of their peers, among other Chinese manufacturers here in Europe.
And Grace, there's still so many question marks about whether tariffs in a certain way are deflationary or inflationary. Again, can China help with balancing things out?
I think it can to some extent. I mean, the first round impact of tariffs do feel to be inflationary, but the downside risk to growth, kind of is more the second round impact. And so I think when we look at inflation, which is obviously significantly lower in China, that can help to some extent. But I think really it's the key metric to me on the inflation front is where US consumer inflation expectations are, because the last few months we have seen those tick up to actually reasonably elevated levels, and those dynamics will impact the Fed and are not the kind of thing that China is going to influence on a 3 to 6 month basis.
Great. Thank you both for joining us. Grace Peters there from JP Morgan Private Bank, and Bloomberg's Craig Trudell with all of the earnings coming up from BYD. Coming up, we also speak to Victor Khosla, founder of one of the biggest opportunistic credit investment firms, SVP. Some say it's investing in distressed companies, so we'll ask about the level of distress out there. We also had to look at what's happening overall with markets. Again, there's a lot of focus on what Trump does next for these targeted U.S. tariffs, which is why we're seeing a bit of a lift, especially with U.S. futures getting some 1% for the S&P, and we can see the NASDAQ futures getting some 1.2%. Markets definitely still on edge ahead of Trump's April 2nd deadline to impose reciprocal tariffs on a raft of other countries, but we've spoken to people familiar with the story saying, look, the announcement is shaping up to be more targeted than previously thought. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Risk sentiment turns positive on reports that the next wave of tariffs from President Trump may be more targeted, with officials saying some countries may actually be exempt. U.S. and Russian officials are meeting in Saudi Arabia a day after American and Ukrainian teams held talks as President Trump pushes for a ceasefire in the war. And Turkish authorities scramble to shore up the nation's assets after the arrest of President Erdogan's main political rival. Now, we'll also focus on the UK. Of course, it's a big week today. Well, big week on the 26th because of the financial statement from the Chancellor, Rachel Reeves. We're also getting some data right now. UK March services PMI rising to 53.2 instead of 51 in March. Again, the composite PMI rising to 52 versus 50.50 in February. So a touch better, but again, nothing huge. Of course, the UK aims to slash the number of civil servants by 10,000. That's as the targets of 15% reduction in the government's operation costs. Now, the planned cuts come ahead of the Chancellor of the Exchequer's key update on public finances on Wednesday. For more on all of this, Joe Mays, Bloomberg's UK government reporter, joins us. So, Joe, thank you for joining us. What can we actually expect to hear from the Chancellor in the spring statement on Wednesday?
Yeah, so the big thing we're expecting is a significant reduction in the overall level of public spending. We're thinking billions of pounds will be taken off that figure so that the Chancellor can continue to meet her key fiscal rule, which is that day-to-day government spending has to be covered by tax receipts. Her problem is that growth forecasts have deteriorated since her budget, her borrowing costs have gone up, and that's left her on course to miss that key fiscal rule. And that's why we're in the world of talking about spending cuts. We think on balance, we can see about £10 billion worth in cuts. 5 billion of that will come from reducing the welfare budget and 5 billion from other government departments. She also tried to have some more positive announcements about funding for various initiatives, but really the big picture is that reduction to spending.
What kind of pressure is the Chancellor facing from her own MPs?
A lot of pressure, and it's really around this commitment that Labour had during the election campaign, which is there'll be no return to austerity in government spending, and yet Rachel Reeves is clearly doing something here which has the airs of being austerity. So she's facing pressure from Labour MPs to do things like perhaps relax her fiscal rules, not be so kind of hardcore with this approach of sticking to those numbers. Perhaps increase a wealth tax. Might that be a better way of balancing the books? There's a lot of concern also around the welfare reductions that we just talked about. Many MPs opposed to that. So there is really a growing split on the backbenches of the Labour Party who don't support the action that Rachel Reeves is taking. For now, a majority are with her, but it's something that she has to watch. And yes, it's a politically sensitive moment for the Labour Party.
So the UK is also considering easing the digital services tax to appease Trump. Why?
Yeah, so this is a potential quid pro quo where the UK is clearly trying to avoid being hit by more tariffs from the US and indeed to try and remove the tariffs that have already been imposed. I think that on the negotiating table, they can see that there is this digital services tax which imposes a 2% levy on revenues from UK users for social media platforms. And that is not liked by the likes of your Googles, your Facebooks. And clearly they are pressuring the US administration to have this tax removed. So the US are using this as a bargaining chip or an attempted bargaining chip in these talks. And the UK is open to this, and we're having discussions at the moment between UK Business Secretary and the US Trade Secretary, Treasury Secretary on this issue right now. So we'll have to see what the UK does. I mean, clearly this tax will raise about £800 million for the UK, so that's really of value. But then also, if it can be used to remove those tariffs, that can have a bigger economic value for the UK. So those are the kind of discussions that are happening in Whitehall at the moment. We'll have to see where that ends up.
Joe, thanks so much. Joe Mazer, Bloomberg's UK government reporter. It's going to be a busy week for Joe and the team. Now, for viewers in the UK and Europe, we have a special coverage of the UK Chancellor's spring statement on Wednesday. That's at 12:15 p.m. UK time, with the Chancellor set to speak from around 12:30 p.m. Now, subscribers will also be able to watch on the terminal, and we'll be live streaming our coverage on YouTube. Now, the relentless demand for corporate debt is showing signs of fading under the pressure of global trade tensions and geopolitical uncertainty. Now, in the U.S., junk spreads have widened by the most in 6 months, but remain near historic lows, meaning they could move out significantly more if a recession hits. Now, let's discuss the debt outlook with Victor Khosla, founder of opportunistic credit investor strategic value partners. That's an elegant way of saying distressed. The firm manages around $22 billion in assets across areas including distressed debt and private equity. Victor, thank you so much for joining us. I mean, you're so busy at the moment because actually I imagine what takes up most of your time is understanding the policy going forward, which means how many companies will be distressed or where there's opportunities for you.
We were really busy last year, even before all this started this year, right? So, and I think the way I'd kind of say it is, last year, in a way, Francine, you had very strong equity markets, you had strong credit markets. Very unusual for us, somebody like us, to be so busy. And if anything, with the U.S. almost taking a completely different path to what it has done, right? If anything, we've gotten kind of a lot busier. So it wasn't like January wasn't the starting gun going off. Yeah. The starting gun went off a year ago.
And this is what? Because of rising interest rates?
Rising rates, maturities of debt. In a way, trillions and trillions of dollars of deals have been done in a 0% rate environment since 2008. And as that debt matures, you can extend it, you can amend it for a little while, but as that debt matures, you have higher rates. You just have had much higher defaults than you would expect.
But Victor, so I'm still surprised, that we haven't seen, more distress, that we haven't seen anything big going under or anything big going ugly. So is the overall health of a lot of the companies better than even you thought?
No, it isn't.
So we're just not seeing it.
We are seeing it.
Yeah.
Because under the surface, right, and this is even before this January, there were, like if you take last year, there are 6 businesses, Francine, worth about $1 billion each, where we took over the business and today are the majority equity owner. There's $1.5 billion of real estate investments we bought. There are some very large investments we made in real assets. So all this, you know, it's not the headline grabbing $15 billion bankruptcy. It's not Lehman Brothers. It's not that. But what is happening underneath the surface is just frantic activity.
So where do you see the most opportunities, in the US or Europe and the UK?
Europe has been struggling economically. So as a firm, we are about 60% US, 40% Europe. We're almost equally balanced. And Europe has been struggling economically now for the last few years. So we've always felt, so when we look at our pipeline of kind of deals today, it's more 60% Europe, 40% US. So if anything, we're leaning more towards Europe. Now, the US is doing a good job catching up, right? So please don't get the wrong idea, right? But Europe has just provided us with just a steady stream of opportunities for the last 3-5 years.
Victor, what's your strategy in the UK? I think you just bought a sizable office in London. Is that because you want to grow in the UK?
We've always, for us, we've always been a steady investor here for the last 20 years. So for us, it's just
so it's a cherry on top. It's not like
it's 40% of our portfolio.
Fine.
We have almost 50 investment professionals in London. So as you know, for us, it's just like as an opportunistic credit person, it's just been like the last couple of decades there's been a lot of stuff for us to do.
There's been a sea change when it comes to European defense. How do you play that trade?
We are not a defense investor. So for us, we don't really look at buying defense companies, running defense companies. So it's just kind of a modest interest to us.
Is there a sector that you think is particularly good?
I think for us, the manufacturing businesses, industrial businesses, business services, consumer brand businesses, very much the sort of investments we look to make. Yeah. And then there's a moment in time when real estate gets really interesting.
Now or soon?
Now. It's here. We bought, look, we recently bought a property in London. We took over the largest shopping mall in Ireland called Blanchardstown, and we did that late last year. So for us, if anything, it's time to get rolling on the real estate side.
Even in Germany, or do you really break it down in terms of countries?
No, we're very focused on Germany. The opportunity set so far has been more England and Ireland for us. But I think our sense would be these high rates. High rates, which, when you borrowed money with German bunds in negative territory to now German bunds close to 3%, you just have a problem, especially when you are buying properties for 3%, 4% cap rates.
Do you think we had credit complacency?
Oh, of course we did.
And is that over?
Yeah, I wouldn't go quite that far. There is still, when you think of the credit world, spreads are incredibly tight, as you started out saying. But you can make 8% in junk credit today. I think equity markets today, you'd say, hey, if I get 8% out of it, I think it's kind of pretty good. So when you think about 8% and those sort of returns you can make, I think people are, I don't think the complacency, I wouldn't go so far as to say it's over. There is a reckoning. And it is here. And
it's starting. Victor, where do you see opportunities in the U.S.? Because there's a lot of noise, there's a lot of news. Does that give you an extra layer of opportunities?
It does. The U.S. has always been fortress America. It doesn't have very much in the way of these economic events or economic cycles. In Europe, You know, when we contrast it, Francine, every 2-3 years, there's a crisis in some way, right? But what is happening in the U.S., this upending of kind of how the U.S.'s relationships with the world work, tariffs, you look at how we are remaking the U.S. economy, right? That uncertainty, and it won't go away after April 2nd, after the tariff thing either, right? That uncertainty, it's dropping consumer sentiment, it's dropping industrial growth.
So do you see opportunities, in everything linked to consumer? Is it retail?
Consumer, industry, manufacturing. So those are the sort of investments we've been making over the last 6 months. And if anything, we're just leaning much more into those kind of deals.
So interesting. Victor, thank you so much. Don't be a stranger. Every time you're in London, you should come back on so we try and keep pace with what you do next.
Yeah, I don't mean to be overly doom and gloom and scary about it, but there are parts of it which are really problematic. But thank you. Thanks for having me.
Thank you, Victor. Victor Khosla there, the founder of Strategic Value Partners. Coming up, we'll also be joined by the LinkedIn co-founder, Reid Hoffman, who's written a book arguing that AI will enhance human agency rather than eroding our thinking skills. Stay with us for that conversation. That's next, and this is Bloomberg. Now, earlier this month, an AI model called Manus went viral for its apparent ability to act more independently than AI chatbots. Now, the development of the so-called artificial intelligence agents have raised concerns that they will erode human ability to think. But Reid Hoffman, the LinkedIn co-founder, Microsoft board member, and Greylock partner, thinks the opposite. Now, he's just published a book in which he basically argues that AI systems gain greater abilities. They will enhance human agency, hence the book's title, Super Agency. What could possibly go right with our AI future? And Reid is here with me. Thank you so much, Reid Hoffman, for joining us. I mean, this is a fresh of breath air because there is a lot of concern, a lot of worry that AI takes over. The computers will be in charge and will basically stop using our critical thinking.
Yes, but actually, in fact, if anyone plays with AI today, it is the most amazing educational technology we have created in human history. If you want to learn anything, I use it to learn everything from quantum mechanics to I wonder what cooking sous vide in this way looks like. It's everything.
But I guess the concern is that, especially people that go into a first-time job or students or college kids don't use their critical thinking anymore, because if you just go into chat box and say, write me a sonnet with this, this, and this, it does it for you.
Well, it definitely can do a bunch of things for you, but that can help you elevate your game, right? So it's a little bit like if you were just copying Wikipedia as handing in your essay. Sure, you could do that, but actually, in fact, you should use it to inspire you, to make you think better, to say, hey, like, for example, when I was writing Super Agency, I would put in sections and say, how would a history of technology specialist critique what I've said? And then I understand it, and I can decide whether or not I change or edit and so on, and therefore the book gets better.
So, Reid, it doesn't reduce cognitive capabilities, right? This is a big concern that we stop thinking, that we think less, that we think differently.
Well, I think it makes it, just like all technology, you can approach it being lazy. And so if you just say, okay, I'm going to outsource it, just like, for example, I'm going to say, whatever the first search result on Google is, that's the answer. And if you do it that way, then, of course, that doesn't help you extend. But if you do anything in terms of having it be a dialogue with you, having it extend your capabilities, asking a question, getting an answer, asking another question, then it greatly amplifies your capabilities.
How do you get rid of the biases? Because if you have too many biases, then it skews, of course, democracy.
Well, so all of the major AI labs are trying to get it as kind of call it unbiased as possible. Now, within human perspective and human knowledge, there's always some things of bias. We're always learning. Like if we kind of look at human beings 50 years ago or 50 years past, and we look at them and say, oh, they were biased about this. I'm certain humans 50 years from now will be looking at us the same way. So it's an ongoing process with us as well as the technology.
Reid, is there anything that worries you about AI?
The primary thing that worries me is I call AI the cognitive industrial revolution. It's both for the upside, which is this whole society we live in, middle class, education, medicine, all comes from the industrial revolution. That same amplification is coming. But the transitions are difficult. So the thing that primarily worries me is to say, look, we're going to have to navigate this challenging transition, just like the Industrial Revolution was a challenging transition. But that's how we have our children and our future generations be prosperous and have amazing societies. And so that's the challenge we need to rise to.
So what's the right way of either designing AI or designing safeguards for AI?
Yeah, well, part of it, there's kind of a two-part audience for super agency. One is the people who are AI fearful or concerned, to help them become AI curious. But it's also for technologists, which is designed for human agency, designed for increasing human agency. That should be your design principle and fundamental, and the book is also, I hope, helpful for them.
So, Reid, this is basically putting, the human at the center still of everything. So how they fit into the next decade.
Yeah, well, AI, I think, can be amplification intelligence, not just artificial intelligence, and that amplification, the superpowers that we get, and it's not just part of super agency is if you get a superpower, that helps me too. That's how we have super agency together.
As long as it's democratic and everybody has it, or is that a question for in a second phase?
Well, I think one of the good things about it, and that's part of the reason why the first chapter is about humanity enters the chat a la ChatGPT. When we build technologies for hundreds of millions and billions of people, that's broadly inclusive. So your Uber driver has the same iPhone that Tim Cook has. That's the kind of inclusion that we're targeting.
Reid, I guess evolution is not necessarily progress, full stop. So how do you make sure that this means progress for the majority of humans?
Well, so I think... Look, I think as we iterate and we participate, we make progress. And for example, even though you say, well, we have a whole bunch of cars and that creates climate change, the cars also create our industrial society. And by the way that we tackle climate change is we add carburetor emissions, and we add, we invent new kinds of clean energy, and we do EVs. And so, I tend to be very, as we do iterative deployment and as we bring humanity into the loop, I tend to think we do make progress. Now, I think, again, you make better progress by having the right kind of design principles, by accepting criticism, by talking about it. So, I describe myself as a bloomer, which is not that technology is just great. It's technology engaging with people is great.
But it also depends on the people in charge. What do you think of Sam Altman's performance so far in leading OpenAI?
Well, so I think Sam's great contribution to humanity will be OpenAI. And that's with having done a number of amazing things before and done amazing investments like Infusion and all the rest. And I think that his ability to think very big and to have bet very hard on this, a little bit of technological thesis of scale compute and scale learning systems is what matters. And that's why OpenAI has brought this current revolution to us. And it's these machines learn, and they learn things that we help them learn and help teach them.
Is there someone, I know you've also had your differences with Elon Musk. Who's the person in the space that you, if not admire, listen to the most?
Well, Sam Altman is definitely one of them. Kevin Scott at Microsoft is another. Dario Amodei at Anthropic is another. James Manyika at Google is another. I think part of the thing that's very important about making AI for humanity is people who listen to others and talk to others and accept criticism. And I think that's one of the things that all of these people are very good at.
Do you need to regulate it, or is it something that you need to see how it runs and then think about regulating afterwards?
So I think what you do is you start with the absolute minimum regulation you could do for the things that could be really bad. Not for, oh, look, it might have a biased picture or might have a biased statement. Like, we can iterate, we can fix those as we're going.
Really bad is what? People taking over planes to crash them and things like that. It's
terrorism,
like the terrorism.
Cybercrime, etc. Regulate for that, right? And then do iterative deployment. And by the way, even with iterative deployment, you eventually get to further regulations. So, like, for example, if you tried to make everything perfect with cars before you put them on the road, we'd never have cars. So you put them on the road, and you go, oh, this for bumpers, this for window wipers, this for... And occasionally, like the market doesn't want seat belts, the car manufacturer doesn't want seat belts, and then of course the regulators come and say, oh no, seat belts is good, we're going to add those.
But Reid, if you regulate for things, terrorism is bad actors, bad state actors, so it's, how do you regulate it unless you have to protect yourself? So it's basically finding the technology that blocks them.
Well, I think the regulation is if you're releasing the technology to the general public, which could be to the bad actors as well, you're doing red teaming and safety. Right. You're putting the right security measures to make sure that you're not bleeding the technology to rogue states, terrorists, etc. That you have a safety plan that if you go, okay, why is the technology I'm building, if it does leak or anything else, why will it still be safe? And how do we continue to have the technology that makes anything that's in the wild as safe as possible?
On Elon Musk, do you think he has too much power being so close to the president?
Well, look, I think he's a celebrated entrepreneur, but I think that governments are not companies. Like, for example, risking a company, like, for example, say, our 10 rockets blow up. Who cares? It doesn't matter. The financial system of a country blows up. That's the Cultural Revolution. That's terrible. So you actually have to say we take less risk here, even at the price of some inefficiency, because it's more important for us to not have things blow up.
So do you worry that things are going too quickly with the Trump administration?
Well, I worry that very bad risks are being taken. Speed is not a problem. Risks are a problem. And, for example, it's like, well, we're just going to fire a whole bunch of people. Oh, oops, we fired a whole bunch of nuclear safety inspectors. Like, that's the kind of thing that's taking risks that is unwarranted.
Reid, I also want to talk to you about China, because DeepSeek kind of got everyone, at the edge of their seat. But do you have a good understanding about where China is on AI?
I have a reasonable understanding. I do a fair amount of talking to various people in China in order to make sure. Part of the thing that when last year I was going around saying there was actually an economic race with AI between the West and China. People are like, oh no, you're overblowing that because you just simply don't want to be regulated. And I think with DeepSeek and everything else, we see that race is there. And the Chinese government has said that they want to be, AI leaders, like leading the world by 2030. I think the race is on. I think it's very important for us and our industries to actually, in fact, be winning.
But is this the new arms race?
Well, I don't call it an arms race because it's primarily an economic race. There is arms stuff component to it, but yes, it is the economic race.
Reid, thank you so much for joining us. That was Reid Hoffman, a LinkedIn co-founder, Greylock partner, and of course author of Super Agency. It's a good book, it's well written, and it's to the point. Now later today we'll also have an exclusive interview with the chief executive of Airbus. He is Guillaume Faury at the company's summit in Toulouse in France. You can catch that interview with Guy Johnson at 3:40 p.m. UK time. Now before we go, let's also have a look at what a lot of these markets are doing. Look, they're expecting a lot more targeted tariffs from Donald Trump, certainly not the kind of bravado that we were talking about just a couple of days ago. If you look at a couple of the other things, pound nearing a session high after the services PMI beat, and then also Eurozone private sector is picking up as Germany is trying to fuel its recovery. Up next, Bloomberg Brief with Danny Berger in New York, and this is Bloomberg.